Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products that they don't understand or need. So if you're tired of being a transaction, go ahead and hit that notification bell and also the subscribe button so you never miss another video from us. How are you today, Brian?
Doing great, Michelle. How about yourself?
Great. Thank you so much. So today we're talking about inflation. Specifically, this is not going to be, it's not a topic exactly. I'm like, but inflation has risen 6.8%, which is the highest, it's the largest 12-month increase, I should say, since the period ending in June 1982. So these numbers came out, it was all measured by the Consumer Price Index. Everything came out a few days ago, and we're going to talk a little bit about today what's going up, how much it's gone up, and really just give anyone watching this just an overview of what you need to be looking out for in the months to come.
Perfect. Yeah, Michelle, that was some pretty big numbers, a little higher than we expected, but lower than what the highest estimates were, because they were shooting for some of the highest estimates were showing a 7% increase. So we're definitely seeing the signs of inflation. Definitely this week you'll hear the Fed maybe start pulling back some of the words like transitory, meaning that, oh, this is only temporary. It will transition out of this. We don't believe that. Honestly, we see inflation as an item that is here to stay for a while.
Right.
And, and let's define what inflation is. And most of you know what it is. Just
you can
every
feel
time
it.
you feel it. Okay.
Yeah.
So, but the true definition of inflation is the decline of purchasing power of a given currency over time. So basically you take your dollar bills and you cut off corners of it right now. And luckily you just cut off 7% of it, right? So according to these numbers that just came out. So, and this is reflected in the increase of an average price of goods and services, don't forget the services, in the economy over a certain period of time. And the number that came out on Friday was over the last 12 months, like Michelle, you had mentioned, it's the highest increase since June of 1982.
It's at 6.8%. We mentioned the Fed talking about transitory. This is transitory. They've been saying that for over a year now?
Yes.
A little over a year, something like that. And when we're getting numbers like this, and
this isn't transitory. So because some of the earlier numbers this year, that when they were really first speaking about that word transitory, and everyone was saying it'll pass, it'll pass, it'll pass. Well, it hasn't passed.
Well, let's talk a little bit. I want to define this consumer price index, but I think it flows better if we go into, let's talk about some of these numbers, because you mentioned it's goods and services. So it's broken down. We can talk about gas, food prices, energy, you name it. So let's give, because the 6.8% is the average, correct?
Right. It's an average of a basket of goods. So
right. All right.
So let's look at what has participated in this historic rise since, think about this, the last 12 months. So they're saying since November of 2020. So this is since the last election. Okay. Mm-hmm. Energy prices have risen 33.3%.
Yeah.
Gasoline though is up 58.1%. We see that every day. The energy prices, you're going to start to see them as we move into the winter months here. So heating oil, natural gas. Natural gas is up dramatically in the same time frame. Food prices have jumped 6.1%. We see this every time we go to the grocery store. The meats are going up. The produce is going up. And just the average cost of all goods. Another big thing that we've seen, and Michelle, this was a surprise here for a lot of people. And to me, the pandemic created a lot of this. The used car and truck prices are up 31.4%.
Whoa.
And that's from, number one, we were all shut down. But while we were shut down, what happened? Supply chain disruptions on new chips that go in these vehicles. So I take it back to this, Michelle. I travel a lot. Well, I used to. So let's take rental cars. Rental car companies, remember when we first shut down, everything was dead. There was nothing going on, right? And rental car companies sold off their fleets because every time them cars sit there, they have to pay a fee to let them cars sit there in
Right.
parking spaces and this,
Right.
that, and the other. And well, all of a sudden, when we spiked back up out of it and the economy started recovering, they had no used vehicles. They had no fleet. So, and now we're a shortage of chips. And then all of a sudden, there goes the used car prices. They were actually going to the market, to auctions and buying used cars at a much inflated price. So,
yeah, no, that's why I rented a car over the summer and I was like, what? I mean, if I could find one. Number two, I did find one and it cost me, I don't know, almost double what I would have normally paid for it. So
you're exactly right. Well, I'll tell you, Michelle, some of my trips, I could fly into Orlando and they were $7, $8, $9 a day. Now it's $110 a day. So it's 8 to 10 times the costs if you can get a rental car. So now it's starting to come back down a little bit, which is good. But another thing in this inflation jump was clothing apparel cost up 5% across the board. So
let's talk about that, the food, the 6.1% increase in food specifically. And this is a lot. There's a lot in that, and some meats are higher than, again, this is just food. What do you foresee that going up? I mean, I know none of us can predict the future, right? But based on what you're seeing with supply changes, with, I just read an article about how it's a little difficult to get alcohol because the glass.
It's funny. You speak about that there. One of my favorite alcohol beers is, it's only being made in a can right now. And I'm not a can fan when it comes to alcohol. So I like the bottle. Well, they're only putting it in cans now. It's like, what?
So you're drinking it out of the cans.
It's like, so I'm taking it and pouring it into a glass and putting my lime in it. But anyways, but no, we can't predict where this is going. But, I was listening to CNBC this morning, Michelle, and they're talking about, they were interviewing farmers in Texas. And so farmers are the front line workers of what's going on with food prices, right? Well, what's going on right now is they're complaining the fact that their fertilizer cost used to be low, $200 a ton. Now it's over $800 a ton, 400% increase in fertilizer. Right. Do you think that food prices that jumped 6.1% in the last 12 months is transitory?
No, not with that, because they're going to have to they'll pick and choose which crops use less fertilizer. We won't feel it now. We'll be feeling it in months to come.
Right. I think I've seen beef prices up 21% in the last 12 months also. So think about that. The farmers know what's going on. I think I think this is a mild, what we're seeing in the food prices so far. I think they could actually get worse. That's just me, but I'm a forward thinker and looking at all the other issues that come into making food today. So.
Right. Well, and then the energy prices are up 33.3% over the last 12 months. It costs money to transport. That means the cost is passed on to the consumer. Yeah.
We're seeing it. People are seeing it. And what you've also seen on Friday announced, because of all this, Michelle, you're starting to see that consumers, their feeling about the economy is starting to come down. So they're starting to shelter back a little bit. And to me, that may lead to a slower economy in the future. So.
Okay. I want to jump in and ask a few questions about the CPI, the Consumer Price Index. But before we get there, we did a video on inflation in your stock portfolio, specifically what stocks work better during high inflationary periods. And that's going to be below this video, and we'll put it in the top as well. So make sure to check that out if you do play the market. Or you're in the market, I should say, invested in the market. So what is the definition of the Consumer Price Index? And what is that? You mentioned goods and services, but let's break it down so people really understand what it is.
Yeah, and you hear the CPI. When you hear the CPI, that's the Consumer Price Index. Right. And it's a measure that examines the weighted average of prices of a basket of consumer goods and services.
Right.
So that could be like transportation. We talked about the energy costs. It could be food,
clothing,
food, farmers, beef. And then medical care.
I was going to ask, does it cover medical care?
Yeah.
So because that's a service. Okay.
Yeah. So any type of them. And what they do, Michelle, is they take this basket, and that's where they come up with these numbers. And you'll see, sometimes you'll see they'll give the CPI index numbers, the readings on CNBC or Bloomberg, whatever you watch, and it might say X energy, so minus the energy factor, because energy is a big one, because like 33% increase in energy and 58% increase in gasoline. That changes that whole basket. So sometimes you'll hear them take out that to bring the reading down, so it don't seem as bad, but still is, because it's a weighted average. So
got it. Okay, thanks for explaining that. And that is important. It is a weighted average, and they are. I'm not going to use the word. It's manipulation of numbers.
Well, yeah, you always want to put your best number forward, I guess you want to say, and that's a better way to say it, I think. And sometimes not showing the true big numbers. Let's take this out so it sounds a little better.
Right. So it looks better.
Remember, we trade and we invest. You see traders make big trades based on headline numbers.
Right.
So that's why anytime a number like this came out, the gyrations in the market in a couple minutes time is just ridiculous, because they trade on that headline number, and then everything settles back down when they look at the whole weighted index of what actually happened. So
all right, is there anything else that we need to go over today in this video?
No, that's the big thing, Michelle. Just watch it. Make sure you have your emergency fund. Many people are tapping into their emergency funds right now to be able to, make up this extra cost that they're spending right now. So just be cautious. And some of this stuff will have gyrations that spike up fast and then come right back down.
We've seen that we've seen that.
Lumber.
Lumber.
Last summer, lumber was up 8-fold. Well, guess what? Now it's lower than it was prior to that. So again, a lot of people put off purchases based on them quick spikes, and they were smart to do that because the price came back down. Now we're back to normal in certain things. So just watch that. It's a good reason to go back to one of the things I learned when I was teaching Boy Scouts years and years ago was be prepared.
Yeah, always. Absolutely. All right. On that note, if you like this video and you found the content valuable, please hit that like button. And also don't forget to subscribe, and do check out, we do have 2 videos, one on inflation and your investments, and one is on inflation and your stock portfolio specifically. So those links are in the description of this video. Make sure to check them out. And thank you very much for watching. Thanks, Brian.
Thanks, Michelle.